Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone's doing great on this PPI morning. Let's go ahead and take a look at the hot zones, the calendar for today, Thursday. And you take a look early morning, we have some interesting data coming out in terms of a central bank. So it's a hot zone, meaning a scheduled high impact, high volatility, high volume event. And that's the Bank of England and their Monetary Policy Committee. I would not put the Bank of England in necessarily the same bracket that I would the ECB or even the BOC in terms of the impact that we've seen on the US markets. But if you take a look, now look at the 7 a.m. here. And if we go take a look at what we have seen intraday, we jump on over into an intraday chart. All right, so if we take a look at what we've seen intraday on, say, the S&P, take a look at the action from 7 o'clock on. Now, unless there's something going on in the U.S., there's mostly going to be the effect of this BOE. Take a look at this candle here at 8:15. Did anything happen in terms of the U.S. Data releases at 8:15, or was this potentially, again, some kind of mix of before core PPI and in between the MPC? It probably is not going to be necessarily, again, as impactful as Bank of Canada or the ECB, but let's not ignore it's a significant central bank. 7:30, you can see the Bank of England Governor Bailey was speaking, and then we go into the PPI. If you notice, I don't even refresh my Forex factory because, frankly, what the actual was is less important to me than what the expectations were, what was the consensus, or even what was the estimized whisper number. That's more important to me. And then I'll simply take a look at what kind of volatility did we see at 8:30, and not much at all. In fact, you can see this candle right there, 8:30, 8:35. The already bearish mood of the S&P just continued to move lower. And before we look at this and go, oh my gosh, it's such a bearish day, it's a bearish morning, it's a bearish pre-market, but it's actually a pause. Take a look at the daily time frame. And if you ever find looking at 2 minute, 1 minute, 3 minute, 5 minute time frames, I like the 2 and the 5. And funny story. So someone asked, where do you get the 2 minute from? It was one of my mentors. And I asked my mentor, I said, what's with this 2 minute time frame? I was a big fan of the 5, still am. And he says, well, it's slower than the 1, but it's smarter than the 3. I'm like, okay. In other words, it's smarter than the 1. It's quicker than the 3. It's another way of looking at it. In other words, that 2 minute, I have found gets the best of both worlds. It's 1 can be too twitchy. 3 can be, relatively speaking, a little slow. That 2 minutes really pretty darn powerful. That's my day trading view. So if I'm going to look at what the reaction was of CPI, of BOE, I'll look at it on a 2 minute, but it can really distort our reality because now we're seeing red candles and a downtrend and everything looks so dire. And then look at this daily. That's an inside candle, gang. So if you ever find yourself, who's been on a boat in rough seas? Remember, the first time I was in rough seas was on a liveaboard, and we took it over to the Bahamas, and we were going to be diving for 4 days. On the way back, so I don't know how many of you have done Gulf crossings before. You're cruising either towards Bimini or you're coming back from Bimini, and you see in the horizon, it looks like a herd of elephants way off in the horizon. And then when you get there, you're already all of a sudden in 12 to 14 Cs with the occasional 16. It's crazy. And I remember this is the first time I dealt with really rough seas. So someone said, keep your eye on the horizon. Try to keep yourself steady. So when the 5 minute is making you seasick, gang, jump on over to the daily. That's our horizon. It's an inside candle. We're not going anywhere new, right? To me, that's a great way to sort of keep your equilibrium. All right, so that's where we sit right now. Post PPI, post BOE, little bit of a bearish mood on the 5 minute, but an inside candle on the daily. Which means, look, the day's up for grabs, right? The day is up for grabs. Now, it's a very different look on NASDAQ. And a lot of this is going to be a trade that we've got going on in the sector secrets mastery. Beautiful daily price movement range setup. the DPMR. We looked at the historical volatility, uptrend on Google, DPMR setup. So my Sector Secrets Mastery folks, those calls that we've got in Google, we scaled out of once yesterday. We moved to that break even. You better believe we're going to be looking to scale out again this morning. We won't look a gift horse in the mouth. So nice trade there. Let's jump into the questions, gang. As always, big shout out to everyone tuning in on Facebook, Twitter, the YouTube, and then our training room. Good to see you all there as well. All right, so let's jump in to the questions. Good morning. Good morning. Franklin says, new here. Welcome, Franklin. What are my thoughts on plug? All right, Franklin, let's take a look. So I look at 3 time frames for the most part: a day trading time frame, a short-term swing trading time frame, and the daily. Plug is in a downtrend on the daily, which means that is the dominant psychology. So if you're thinking, and I don't know where your thinking is, Franklin, but for me, it's a short only. It is not time to go bargain hunting in any way. I'm not a fan of bargain hunting anyways. This is not a blue light special as of yet. So I would stay on the sidelines to the long side, but shorting the rip seems to be the gift that keeps on giving right here. All right. Okay, jumping on over to our YouTube channel. Morning. Can we take a look at Amazon? Sure. Amazon is a stock that I talked about on Tuesday. And it was an important stock to me because it's the number 1 weighted stock in the XLY. The XLY has been the laggard on the NAS. And I said, look, let's take Google out of it, right? Take the BARD announcement and a folding phone out of it and ask yourself, if Amazon were to get with the program, if it were to get the memo, XLY, the number 3 weighted sector in the NASDAQ, if that thing gets the memo, doesn't that help NASDAQ lift? And that's exactly what we're getting. So if you didn't check out that update, it's back at the Simpler Trading YouTube channel. So do I like Amazon? Has it crossed over into the bullish hemisphere? Take a look, gang. Not only has it crossed over into the bullish hemisphere, I want to be a buyer. And at this point, I'll just need to set up a little bit of a retracement, wait for the thing to come on sale. And notice, finally, this month, we're back into almost a confirmed uptrend on Amazon. So yeah, it's time to get bullish on Amazon. This echoes of what we spoke about on Tuesday in the free video. Now, relatedly, let me jump on over to Praveen's question on Tesla. So if we take a look at Tesla, and I take a look at the number 2 weighted stock in the XLY. So after Amazon comes Tesla, and Tesla's still a mess. It's still in a downtrend, but let me just mention this. The NASDAQ nor the S&P needs Tesla to move higher to continue higher. The NASDAQ, Tesla's weighted in the NASDAQ, right? It's weighted number 2 in the XLY. It's weighted in the S&P. They've been doing fine, right? Thank you very much, kind of says the NASDAQ and the S&P. We'd like you to join the party, but we don't give a rip if you don't. So remember, in terms of weighting, we don't need Tesla to come along for the ride. It would be great, though. Tesla's still a short the rip, Praveen. And then I think to myself, of all the things that I could be doing, is it really a short that I want to be focused on when the overall tides of the different sectors, XLK, XLV, XLC, are moving higher? Apple, Meta, Google, even now Amazon joining the party. My bias is to the bullish side. So when I look at my 2 watch lists, I have a watch list every week. I put together a very succinct watch list in This Week in the Markets, which you can check out, by the way, at thisweekinthemarkets.com. And I put together 2 watch lists. And when I think about what I want to do across most of the broader averages and the high concentration weighted sectors, I want to be a buyer. So I have a buy watch list and I have a short watch list. And I would say for the most part, I'm just not as interested in the short watch list because the broader tides are moving up. Think boats and tides, gang. And when the tides are lifting, even some of the, sort of dysfunctional boats out there may grudgingly go up with the tide. Just not Tesla, though, right? So that's a short the rip. And if you want to do that, and on down days, if you want to look at Tesla, or if you're looking just to have a short on your book, that would be a good one to consider. All right, next up, let's take a look. What else do we have here? Now, what kind of noise was this at 8:15? Yeah, some folks are saying regional bank and whatnot. Yeah, that's probably, look, we were already moving lower from about 7 on. So I'm probably gonna say some of what we saw was in three things I noticed at 7. We crossed over the 200 on the 5-minute chart. That's the bearish hemisphere. We had the Bank of England, and then right about an hour, 15 minutes later, here we have whatever that, what was it, Pac West again. And then you'll see, by the way, when we see these regional bank stories play out, I want to be a buyer in XLF. I will avoid KRE. I've been mentioning in the newsletter, avoid KRE, be very cautious with RTY, with the Russell, because of the weighting KRE has. But if the bank noise is going to affect XLF as well, I want to be a buyer. Let's take a look at what we might get at the DPMR. Again, we've done this once, right? My mastery folks, we bought this move into volatility support. Let's cue that up again. And KRE is the gift that keeps on giving for those XLF, for those big bank buys, whether that be XLF or JP Morgan. Thanks for that. Thanks for that, gang. All right, moving on. Am I bullish in Microsoft? Am I bullish in Microsoft? Well, I am if the structure dictates, and it sure does. So this is XLK. This is related to Apple because Apple and Microsoft are number 1 and number 2. And I would absolutely be a willing buyer of the dip on Microsoft. I mean, Bing had its moment there for a minute. Remember the Chat GPT Bing? It was the Google killer. Pretty interesting. I've been playing around with it. I'm a big fan of playing with the Chat GPT. I've been playing around with Bing, looking at what Bard syncs up with. It's pretty amazing. But Google came and dropped the hammer yesterday. But I am absolutely a fan of Microsoft to the upside. And one cool way to take advantage of a bullish Apple and a bullish Microsoft, gang, just kind of a twofer here. XLK. All right. Next up is, Meta. Sure. Let's take a look at Meta. Absolutely. Let's take a look at Meta. So number 1 weighted stock in the XLC. The communications XLC were really just absolutely a dumpster fire for a very long time. When Meta starts to wake up, when Google starts to wake up, that's going to be extremely bullish for XLC. Now, the reason we think about all these connective threads, why do I mention another sector? Why do I mention an index? Why do I mention another stock or two when we're talking about a single stock? Because stocks do, based on their weighting, depending on where they're weighted, move together. Meta and Google are going to have a little bit of a simpatico kind of reaction. It may not be helping Meta today, but that's okay. If the overall tide is up in the XLC, if the overall tide is up in the NASDAQ, I'm not a bear here. We might look at Meta. Looks like it's going on sale. Right? I still remember as a kid, how many of y'all remember blue light specials in the center of Kmart? That's literally to this day what I see and what I think about. So do I want to be a buyer in Meta? We might actually use the Darvis here. It's got a little bit of proximity to the volatility zone of the daily price movement range, but we might use this automated support and resistance of the Darvis. If you, by the way, are looking for some very good automated support and resistance that is not about projections, but rather about previous turning points in the market, check out Darvis 2.0. If you are a member of any of the rooms, the main rooms, whether it be options, futures, or even my mastery, of course, I give you all the Darvis 2.0 gratis. However, my non-members, check out TradingView, do a search for Simpler in the indicators, and you will see I've made available now for years the Darvis 2.0, the propulsion, as well as my wave and grab candles. They are free. You can just activate them right there in TradingView. And not all, but a lot of the main tools that I use to make a lot of the decisions we talk about here in Charts and Coffee are available on the TradingView platform for y'all to check out. So Meta, I want to be a buyer. And I would say that Darvis 2.0 or the DPMR is looking pretty darn good. All right. Next up is, I see a question on Nvidia. All right, let's jump into that. So Nvidia is going to be a high concentration weighted name as well. It's another uptrend. Gang, I'm bullish. It's hard not to be. The only folks who are going to continually talk about the bearish side are folks that are fear mongering, and they're always going to be here. Perma bears, they're always going to have a spot on television. And folks who are looking down the road thinking that a recession is going to undo this market. It ain't, right? I say that with a little bit of swagger, because if anyone looks at historically what a recession causes two things, right? And anyone can go search this. I'm not talking about anything inside baseball. This is not speculation. Most of you know. I know a lot of you have been in the markets for a long time. But those of you that haven't, you might say, Rog, yeah, what does a recession do? A recession actually increases labor productivity. That's been a problem the Fed's been citing. So you might say, Rog, could that actually be bullish? I'm talking about the stock market, right? The stock market is not the economy, but could labor productivity be improved with a recession? It typically is. It's what the Fed would want in that regard. And then when we are in a recession, the Fed tends to cut rates. So when you take a look at the Fed Fund futures right now, which again, you can look at it over at the CME, just Google Fed Watch, and you'll see that where the most extreme, the most emphatic discounting, the most expectation for when the Federal Reserve is going to cut rates is sitting in September, November. Where are we told the recession is going to kick in? Oh, the second half of the year. Isn't that so funny? That's where we expect. And I mean, not by a little bit, but by a landslide, we expect the Fed to have pivoted by November. It's not about telling the future. It's always about what are we expecting? Therefore, how is price action moving in expectation of it? And that's where we sit right now. Pretty interesting stuff when you look at that timing of what Fed Fund futures are saying about what they expect the Federal Reserve to have to do. And believe me, the Federal Reserve knows that this is something that collectively we, traders and investors, are communicating to them via those Fed Fund futures. All right, so Nvidia is definitely a buy the dip. We could probably be a little aggressive with that around the 285, 80, maybe 286 area. So I need a little bit more weakness to get long Nvidia, but this is a long only short-term swing based on the daily time frame. If you want a slightly smaller window to the short-term swing, this could be interesting. If you take a look at the 1 hour, which is my other time frame for short-term swings, when I want the shorter end of that time horizon window, maybe there's a near-term short, which would actually feed the longer term buy on the daily, because I need weakness to get to that buy zone on the daily. And maybe we end up with a little bit of a pullback from an overbought 1 hour in the meantime. So one time frame in this regard is going to feed the other. And I want to also remember that my setups on the 1 hour are distinctly different, right? They're very different. They're distinct from what I'm looking at on the daily, because 1 hour market structure can be different than daily market structure. It can be different than 5 minutes. So each time frame is a little world, a little slice of psychology unto itself. Yes? All right. Next up is, let's see. How much do candlestick analysis apply to intraday reversals? MP, there are only two candlestick, I don't even want to say candlestick patterns. I really don't use them. A doji looks like a doji on a Western bar chart really as much as it does a candlestick. So I like price patterns. I'm not necessarily a fan of chart patterns or candlestick patterns for that matter. I'm a fan of price patterns. My favorite two price patterns that would overlap with candlesticks, the ones that I use day in and day out and teach, are inside candles, which in Japanese candlestick jargon would be a harami. And I do like minor highs and minor lows, which sometimes can sync up with things like your morning and evening with stars or whatever. Again, I am not a candlestick pattern expert in any way. It's not something that I use to make decisions day in and day out. But dojis are important, but they're important on Western bar charts too, right? So when you have a pattern that sort of transcends simply being a candlestick pattern, you're onto something really good there. So if there's a candlestick pattern you like, try to find if there's something outside the candlestick pattern world that also gives it credibility and attention, and then you're onto something special. For me, inside candles, minor highs, minor lows, do that for sure. All right. Let's see here. Oh, we're out of time. Oh my gosh, how did that go by so quick? Thank you as always, gang, for all the questions. I appreciate it. Tomorrow we'll be back at it, same time, same station. All right, gang, be good to each other. I'll talk with you soon.